Hey guys, welcome back to Zimmerman Trading. Today we're going to go over directions, trade setups, and stuff utilizing the professional scalping strategy using two of our indicators that we have here, the range in trend and also the ATR top and bottom. If you go to this link, you will take you to this page where it will have descriptions, strategy idea, indicators needed, and how to set up in terms of settings, everything on this website. All right. So if you just go here and they'll tell you how to set everything up and written out directions, but we're going to do a video right now showing how to actually utilize this strategy. Okay. So before I get into it, I think something important to point out is that you need to have a basic understanding of market structure to utilize this strategy. So this strategy is to get you into the pullback of a trade. Now, if you don't know what a pullback is, when you have a trend, right, and it goes up, we know the market moves in waves, right? So this is obviously an uptrend that I'm depicting, right? So we're here. There's our uptrend. If you need help identifying what type of trend you are, here's your trend line, right? Right. Obviously, bad trend line, but you guys get the idea. So there's an uptrend. Here's our trend line. Impulse, pullback. Impulse, pullback. We want to get in on the pullbacks because we all know what they say: buy low, sell high, right? So we're in an uptrend. We're not looking for sells. We're looking for buys. But say you only see the market once you're already in the impulse, you wait for the pullback, right? So if you have a basic understanding of higher lows and lower highs, right? There's a higher high right here, high, lower. I'm sorry, higher low, higher high, higher low, higher high. You want to get in on the higher lows. This low is higher than this low, so on and so forth, right? So let me get rid of this and put back the indicators on the chart, right? So here with the range and trend expo, and here we have the ATR trend top and bottom. Now we have the moving average that basically tells us we're in an uptrend. When it's green, is in an uptrend. When it's red, is in a downtrend, right? So let's start over here. We have this downtrend happening right now. Break of structure, low, high, lower lows happening, and then we're just in this downtrend. The moving average is red. So how you use this strategy is first identify the trend. Very easy. Moving average is red. Understand basic market structure, broke structure here, and now we're in this downtrend, beginning of this downtrend. We had this push to the downside here, right? So if you didn't catch this initial move, while our moving average is red, we get this impulse, which is this green right here, and this is where you enter on the following candle. Boom, short position, and your stop loss can either be one or two places. You can calculate it using the ATR values or the last swing high or right above, slightly above our last candle, right? And then your TP can be in one or two places at the last low or when you get another negative impulse, which will be here at this candle, right? We're here at the ATR bottom, right there. If I were to put a, I'm sorry, if I were to put a vertical line, so we got in here, and then you can exit at the top of this, and you could have scalped this on US 30. Or what I can recommend is that you divide your risk into two. Have one trade running for a one-to-one risk reward, or to the last low, and also be able to take profit at the peak of the negative impulse here. So for example, if I was risking a standard lot, I would put in 2.50s and one is running one running to last or to previous swing. Second to next negative impulse from ATR top bottom. All right. That's how I choose to utilize this strategy and maximize my profits. So now you have one trade running risk free, right? One closed, and then you just have one running to full TP. And we get the same thing again, right? We got that negative impulse, and then we get this positive impulse while our trend is still red. We get this positive impulse, and we enter at the peak, which is this candle. You guys can see right here. I'll try to zoom in a little bit with this right here, right? And that allows us to catch serious scalping moves. Keep in mind that this is a US 30 on the 2-hour time frame chart with very little risk. We can put our stop loss at the top of this last wick. Full TP immediately. Hopefully this makes sense. So if you don't catch the initial entry, right, for the sells, obviously we got our red trend line, and then the red ATR top and bottom was identifying a trend to the downside. Say we miss this, we are able to get in on the pullbacks, right? Because we went over this. Now we're in lows, boom, pullback. This is the trade that we catch. Okay? Full TP immediately. And if you utilize my strategy, obviously, if you're not playing with standards, you just calculate your risk accordingly. I am just letting you know ways of how to capitalize the most out of this trading strategy while also not over leveraging or risking your account. It's all trade management. So we had this negative impulse, right? With the trend, counter trend entry for positive trend results. Hopefully that makes sense. So now we have a breakup structure to the top side, right? So now we have right here a break into our new trend. So we have this going on, and then the break of this last high, and now we have the beginning of an uptrend on this impulse candle. You can see that our trend line turned green, and then now our ATR top and bottom is green as well. So you never want to get in the beginning of a trend, even though people won't be like, yes, I would love to get in and catch all of this. You also don't know if that's the direction that the trend is going, because this can definitely just be another pullback for the continuation of a selling momentum trend. So we see that we have a breaker structure here, and now we want to wait for our pullback. So you see here, positive green trend, positive green impulse, small pullback, but you can see here at our ATR bottom, we have a negative impulse. I'm sorry, my plus and minus gets in the way, but if I'm gonna hover right over here, we have this negative impulse. It's very small, but it's still a pullback, right? It's still a pullback. And now at the peak of this pullback, you pay close attention to it. At the peak of this pullback, we can enter on the next candle, entry long, right? At the opening of the next candle. And not only do we hit full TP on a 1-to-1, but we can adjust our stop loss to the last swing low right here, right? Right underneath the wick of these candles, the lowest candle. You can set it underneath the trend line. You can calculate it using the ATR, but you can see how this is pretty much giving you sniper entries, scalping on hot indices, right? So now we have a trade that hit full TP with a simple strategy, right? So now we have a positive trend, positive impulse, right? Peak, range a little bit. Now we have a negative impulse in a positive trend. Now, this is what happens sometimes. You get caught in consolidation. So, say you were to take this, following the rules, right? I'm making a whole videos, we're following the rules. You know, we told you when it pulls back and we get this negative impulse here, right? That to enter a trade. That's the criteria for the trade. So say you get to this long position at the peak of the negative impulse right here, and you set your stop loss either beneath the moving average or a little bit beneath um, the candles. Chances are you would have got stopped out eventually, or if you calculate using ATR values, you'll be slightly beneath the last low, which is right around here, right? And I'm not cherry picking it. I'm just giving you guys examples of how to calculate your risk, stop loss. There's ways to do this to avoid stuff like this. Obviously, we're on the 2-hour time frame, so you would have been holding this trade for quite some time. But you can see that we eventually will hit TP, full TP on a 1-to-1 if you continue to hold this trade until the next positive impulse, which is over here. For a consolidated market. So this is it can go either way. It all depends on how you actually held your stop loss. For most people, I know they like to have their stop losses tight. So some of us might have gotten stopped out. If you calculated it utilizing last swing lows or the ATR, you probably would have been in a position to hold this trade long term and catch the full move. I'm gonna just squeeze it over here. So right over here, right? So that's just an example that I feel like you guys should see. Um, and so on and so forth. So we got another one, right? We have a lot of consolidation going on here. Another example, green trend line, a lot of negative impulses for entries. Now, we got the negative impulse here, long position, boom, at the top. We will actually be good for quite some time and actually hit full TP on this candle. All depends on how you adjust your stop loss, right? Um, Positive impulse, negative impulse. Just giving you guys some trade, right? Full TP, quite some time. And there's US 30. We could also go to Bitcoin and do the same thing. Everyone loves trading Bitcoin. Boom. So let's go to the 1-hour chart on Bitcoin and see what we can pull off over here. Right. So let's start over here. Positive trend, right? Then we have this negative impulse. Our trend line is green, so that means we're looking for entries on buys. Negative impulse, meaning that we got in on the pullback of this open candle right here, full TP. Adjust your stop loss accordingly to the last swing low, which is probably over here or beneath the last candle that we entered from for a really tight entry if that's what you wanted to do. Um, and then again, you can have one trade running and then one trade running to the next positive impulse that correlates with our trend, right? So we had, remember that point, that standard dividing into two, you have one that's going to full TP, and then you have one that's going to the next positive impulse like this such, and you could have caught all of this, okay? Now, same thing happened, positive, and then negative impulse here, long position, boom, TP at the last swing high, you hit full TP there, stop loss at the last low, the candle. There's many ways that you can calculate how you want to trade. I'm simply giving you guys different options. You can either have it one-to-one, you can actually have your TP set to the last high, and for sells to last low, um, and stop loss can be calculated based on your ATR, can be calculated or set beneath the lowest candle, lowest previous candle, swing low. So um, there's pretty much preference at that point. Please back test and figure out what you like and how you want to trade. If you're more conservative or you're more aggressive, so on and so forth. So beginning of a negative trend here, boom. And then we had somewhat of a positive impulse down here. It wasn't large, but it did pull back, right? And we could get in short position right here, right? Boom, full TP. I'm sorry, boom, full TP, stop loss at the last high over here, or slightly above our last candle. Either one that you guys like. I like giving my trades breathing room. So, and then here, and then to the last low, which is over here. Boom, full TP, not a problem. So hopefully this explains to you. This works on all time frames. It works on all assets, you know, from indices to forex to crypto. And the only thing will be just calculating your risk and managing your trades properly. Um, can never stress this enough. It does not matter the strategy you're using. If you do not utilize proper risk, guys, if you don't practice proper trade management, it will be very difficult to find success as a trader. So with that being said, have a great night and enjoy our system.